Alright, in today's video, I'm going to answer the question if Pinterest stock is a buy. You'll have the answer by the end of the video, so let's get right into it. I'm going to use my simplified six-step framework for analysis. The first step in my framework is customer value. For Snapchat, their services are free to join and use. Free is an excellent customer value, but that said, there's a lot of free things out there on the internet today. So you can't just gain customers by offering something for free. You still need to provide value, and Snapchat has certainly done that. It's attracted 347 million daily active users, and so that's demonstration that people are finding value in the services that they offer. And so that said, just because Snapchat is free doesn't mean that it's not generating any revenue. Snapchat sells advertising to marketers, and revenue from that source has exploded from 59 million in 2015 to 4.1 billion in 2021. So marketers are finding good value when they're advertising on the Snapchat platform. The next step in my framework is unit economics. And for Snap, they have a nice setup created, right? Because they don't pay users to create these posts, right? People using Snapchat create what's called snaps, and that creates engagement because their friends and classmates comment on those snaps and view those snaps and share, and it encourages discussion and talking, and all of that Snapchat monetizes, right? It gets to monetize from that. It gets to monetize that activity. So that's a great setup. Still, despite that, Snap has been generating operating losses consistently. It recently, in recent quarters, it fluctuated. It generated profits once or twice, but it hasn't delivered consistent positive net income on the bottom line for more than a quarter or two at a time. The next step in my framework is the total addressable market. And for Snapchat, this is a massive industry that it operates in, the advertising industry. In 2021, it was nearly $800 billion. I wouldn't be surprised if it reaches 800 billion in 2022. So that's a huge market that it gets to operate in. And additionally, on top of the fact that it's in a huge market, it's on the right side of that market, meaning that advertisers are allocating more money to digital spending in favor of previous legacy methods like in newspapers, magazines, paper versions, billboards, things like that, where it's not online, it's not easily measurable, and the folks are not spending as much time reading and engaging in those kinds of advertisements anymore. So Snapchat is on the right side of that. Competition. This is an interesting aspect for social media and other free companies because the price cannot go any lower than free. All of the, meta platforms, Twitter, Pinterest, YouTube, TikTok, they all have free versions that consumers can engage with for free, and so price can't get any lower. So the competition here is with regard to content. Who can encourage the most content, the most engaging content, the one that attracts users the most, the one that keeps users with the platform spending more time, because the more time people spend on the platform, there's more opportunity to deliver advertisements, and the more advertisements equals more revenue equals more profits. So that's where competition exists, and competition in this regard is rising, especially with the rapid popularity of TikTok. It's increasing competition among all the social media companies. The next step in my framework, and arguably the most important step in my framework, is valuation. and Snapchat is expensive. Oh, is it expensive? Measuring by the price to free cash flow, it's trading at a price to free cash flow of 106. Expensive. Now, you could argue that relatively speaking, it's it's getting better because it used to trade at a price to free cash flow approaching 300 and now it's down to 106. So because the stock price has fallen, it's made it a little bit more affordable speaking in terms of price to free cash flow, but still a price to free cash flow of 106 is expensive. The final step in my 6 step framework are risks. And for Snapchat, these are elevated. These are getting higher in the recent year or two. And the first major risk is Apple making changes to its platform, to its iOS, that makes it more challenging for Snapchat to collect data on its users. And if it cannot collect data on its users, then it cannot sell targeted advertising. Marketers love targeted advertising because it's more efficient. They're willing to pay more for it. And the changes in Apple's iOS, which is increasing privacy, is harder for Snapchat. So this is a major risk. It's already having an impact on its revenue. And so this is something that investors need to look out for. Secondly, TikTok is increasing in popularity so fast. It's attracting so much user attention, and this is coming at the expense of other social media companies. And we don't know how far this is going to go. We don't know how many customers, how much user attention TikTok is going to gain. It's so far, it's been so fast and it's sustaining. So that's a risk that investors need to look out for. All right, now that we've looked at each step in my 6 step framework, let's look at what grade I assign Snap for each of these steps. For customer value, I gave it an A plus. Free is an excellent customer value. It's attracted over 400 million daily active users, so it's delivering something that customers love. Secondly, I looked at unit economics and I gave Snap a B here. It's great that users are creating the content for it. However, it's still not profitable enough consistently on the bottom line to earn a higher grade. Total addressable market, I gave it an A plus. The advertising industry is approaching 800 billion, which is massive. A plus there. Competition, I gave it a B plus. It's done an excellent job attracting daily active users and retaining their attention. That said, these risks and competition from TikTok threaten its viability, and so I would give its I would give its competition rating a B plus there. Risks, I would give it a C plus, a lower grade, because risks are so high because of those changes from Apple's iOS and the rising uncertainty of what's going to happen after TikTok continues growing at this rate. Finally, valuation, I gave it a C. We saw how expensive it was. Price to free cash flow over 100 is an expensive valuation. Okay, now that we've looked at all 6 steps in my framework, we've seen the grade. Let's find out if Snapchat stock is a buy. Snapchat stock is not a buy. The escalating risks from TikTok and Apple's iOS combined with the absolutely expensive valuation sway me against buying this stock for now. I would want to wait at least a few more quarters. I want to see how it can react to these changes from Apple. I want to see how negatively TikTok's growth is going to impact Snapchat's business. Until then, I would not advise buying the stock. Okay, so thank you for tuning in today in this installment of Is This Stock a Buy? I'll see you next time. I want to thank the Motley Fool for sponsoring this video.
The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.